Welcome back to Alpha Recap, everyone. Allison here, and we're wrapping up a wild Friday in the markets. As always, if you have questions, you can reach us at stockalpha.ai. Today we're digging into two big themes that closed out the week: AI monetization in big tech and a fresh wave of defense contract headlines, plus a feral run of microcap volatility heading into the long weekend. Joining me is Kate, our fixed income specialist. Thanks for being here.
Great to be here. Thanks for having me.
All right, let's jump in. Big headline number one. Microsoft flagged a run rate for its AI business, coming in at about $37 billion. That lifted a lot of cloud and infrastructure names and generally set a positive tone for tech. Kate, what does a run rate like that actually mean for the market?
What really stands out here is that a run rate is management telling the market how much revenue they're seeing on an annualized basis from current activity. When Microsoft says about $37 billion, it signals predictable, recurring demand for cloud AI services, and that reduces uncertainty about future revenue for cloud platforms.
Right, and that kind of clarity seems to ripple out to the suppliers: servers, memory, data center services. We also had commentary around a blowout quarter at a major server maker, Dell, and Jim Cramer noted it too, which put more spotlight on the whole data center supply chain.
Exactly. When you step back and look at this, clearer revenue trajectories for big cloud providers often translate into more CapEx and longer-term contracts for hardware and service suppliers. Analysts will likely revisit estimates for a subset of tech suppliers next week.
Yeah, that tracks.
Switching gears, defense. Boeing secured a contract modification worth about $528 million for multi-branch military support. That added to booked backlog and gave defense names a lift. Kate, how should listeners interpret these kinds of contract awards?
So honestly, I was a bit surprised by this one. A concrete contract award like that is a pretty classic positive signal. It's identifiable revenue that feeds booked backlog, and it reduces near-term revenue uncertainty for the contractor. Coupled with the political commentary about allied burden sharing, it reinforces demand for defense procurement in the near term.
And the number that really caught our eye in the smaller cap world was a biotech, Replimune, that jumped about 86% to $8.69 on heavy volume. Walk us through what that kind of single-day move implies.
When a biotech triples or doubles on heavy volume, several things are possible. It could be real fundamental news, trial data, acquisition chatter, or analyst attention. Or it could be a momentum play, amplified by retail flows. Heavy volume makes the move more credible, but you still want to check filings or press releases to confirm the catalyst before assuming it's durable.
Got it. Now this leads into the big microcap story. The day was full of wild single-session moves, huge rallies, and steep collapses across tiny names. Some rallies printed nearly 200%, others plunged by 80%. What's the core risk here?
Liquidity. In microcaps, liquidity dictates how price moves. Heavy volume on a rally can hint at broad participation, retail or institutional, and sometimes it sticks. But thin volume moves are often noise. Tiny trades can swing a sub-dollar stock massively. That creates outsized execution risk and the potential for sharp reversals, especially heading into a long weekend with no immediate filings.
Right, and we saw some names print billion share days and others trade just a few hundred shares. That contrast really tells the story about retail-driven ramps versus thin market noise. Quick reactions. Wow, big move. Not what anyone expected. Let's unpack the liquidity signals. How should listeners distinguish between a real re-rating and a pump and dump or a squeeze?
You start with the catalyst. Is there an 8K, a press release, an earnings note, or a regulatory filing? Second, compare today's volume to the average daily volume. If today's volume is multiples of the norm and there's a filing, that's a stronger signal. If volume spikes but filings are absent, that's when you suspect speculative flows or short squeezes.
And let me ask, for big cap tech moves tied to AI monetization, are we seeing correlated flows into chip makers and memory suppliers?
Right, right. And the other thing is that AI monetization tends to drive CapEx across the stack. Servers, GPUs, networking, memory. We did see hardware and services suppliers pick up support. And if analysts revise forecasts next week, that could accelerate re-rating across the group.
Good point. Now, on to market impact and portfolio considerations. A quick specialist view, Kate?
Volatility implications are clear. The market looked bifurcated. We saw steadier, fundamentals-driven flows in large caps, AI and defense, and hyper-volatile, event-driven action in small caps. For active traders, execution risk and spread widening matter. For funds, large one-day moves can trigger rebalancing or margin effects in models that rely on volatility or liquidity thresholds.
Short punchlines from you here. 3 takeaways for listeners heading into Monday, June 1st.
1. Verify any big moves with primary filings, 8Ks, and press releases. 2. Volume persistence matters. Sustained heavy volume supports a durable move. 3. Weekend risk is real. Without follow-up filings, Monday could open with gaps, especially among microcaps.
Nice. Quick checklist for traders and analysts before we close. Check filings. Compare today's volume to normal levels. Expect wider spreads in penny names. And recheck margin rules. Anything to add?
Also watch for correlation and crowding. If AI infrastructure gets crowded, derivatives and ETFs tied to those themes can amplify moves. And on the defense side, keep an eye on any additional Pentagon awards or appropriation signals that could reinforce the trade.
One more short reaction segment. Feel free to riff. Go.
Yeah, keep liquidity front and center.
Right. And to add a lighter note, weekend headlines could make Monday chaotic. So don't sleep on exchange notices.
Yeah, definitely check exchange notices for delisting risk or reverse splits in tiny names.
Okay, let's close with clear takeaways. First, big tech's AI monetization, Microsoft's about $37 billion run rate, gave the sector a clear directional impulse and lifted data center suppliers. Second, defense headlines, Boeing's about $528 million contract modification provided a near-term bid for defense names. Third, microcaps were wildly volatile. Huge rallies and steep collapses driven by liquidity differences, and that elevates execution and weekend gap risk.
And remember, this is informational only. Analysts note market-moving headlines and volume signals. This is not personalized investment advice, and we're not recommending buying, selling, or holding any security. Verify primary sources and use risk management that fits your situation.
Perfect. Thanks so much, Kate. Great context as always. If you have questions about anything we covered today, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai. That's our show for today. Thanks for listening to Alpha Recap. Have a great long weekend, everyone.